everyone, hope everything's going well. I wanted to show you a few cards, but before I do, I'm just not going to be doing as many videos probably for the next month or two on this channel. I still will be doing videos. I'll be doing more videos on my finance channel as things are going to get crazy next few months. And I expect once we get into this nasty recession, I'm going to be doing a lot more videos if I have the time regarding price action. That's what I want to do during this next recession, and just look at how the collectibles market will react. And some people are saying, oh, it's not going to be a bad one. Well, a lot of sophisticated guys that I'm following who were bullish for the past decade are now have raised red flags. So that has caught my eye. There's also other issues. I don't want to get too much into it, but commercial real estate's an issue. We have potentially a geopolitical event going on, and all sorts of craziness going down with the election. And I'll talk more about that on my other channel. So if you're interested in that, watch those videos because I talk a lot about it. But I have some cards now. And a lot of them, yeah, they're political based. But down the road, I'll be buying a lot of sports cards. They're going to be a lot of people selling them. I think I showed you this before. It was Trump under fire. It says Hillary got schlonged. Can't believe he actually said that. You have Joe Biden. I'm a gaff machine. I didn't even want this card. I wanted something else, but the guy sent me this. I'm like, whatever. But I still, he's the GOAT of quotations. Joe Biden, I think I have a much higher IQ than you do. This was when he's back in the day, or he said back in the day. You got legendary performer Stormy Daniels. That's right. You got Hillary Clinton and Huma Abedin. I was buying a bunch of Hillary cards this time around, and why I was buying them, because just in case something nuts goes down in September, October. Hopefully nothing does, but they have to get someone off the bench. You got Kamala. I got people on both sides of the aisle cards, not just sticking to one side. And one of the only few politicians that I like, Dr. Ron Paul, no longer a politician, but so it is what it is. All right, so I'm at financial-planning.com. Found this article, and these individuals, they wrote an article. It's actually on their website if you want to type it. But it says financial planning for baseball cards and collectibles. That's the website you have to go to, or part of the website. But the title is Planning for Clients' Collectibles If They're Actually Valuable. I find it quite interesting that financial planning, they are discussing this. A lot of high-end people, I believe, after this nasty recession, they're going to be like, hey, look, where do we park our money? Stock market won't be doing as hot as it is right now. The bond markets, who wants to invest in bonds long term if we have all this debt? And then 3, where else can we park our money? I think that's what ultra rich people are thinking. And they're actually advertising this, or not advertising, they're discussing this, because I think there's a lot of people that Michael Rubin and his crowd are going to get involved with. And even Martin Armstrong, he does AI research and analysis. He claims that collectibles, high-end collectibles, will be doing pretty well even after this next recession. So that's just what I'm noting. And it's just saying in this article that financial advisors with clients who have very extensive or very valuable collections, and it could stem from cards, coins, shoes, stamps, and even stuffed animals, it says. They have to go through a variety of estate planning and behavioral changes. And it talks about how these are different than art itself. Now, the financial advisors, if they're going to deal with rich people or individuals who are involved in collectibles. Now, I even see JC Peretz. He has all-star charts. He's talking about, hey, man, I'm starting to get back into sports cars. He showed that on his Instagram, or some of his cars that he collected as a kid. So just imagine if you get someone rich like that starting to put money in the collectibles. I know he's into wine, but what if he gets into that? So now, in terms of financial planners, they have to now assess, hey, is this asset really valuable or not? And that's quite interesting. You're going to potentially get financial planners look into this hobby where they may have not really looked into it before, because there's going to be more of a demand for the high end. I'm not talking about like these low end cars that were pumped during the not financial crisis, but during the pandemic. So I find that really interesting. Now, the financial advisors that are going to be looking into this market, they're not going to be understanding all of these sophisticated things that go on. They don't look into hanky-panky that I look into. They don't know about the Kurtz card care juice, the trimming, the CT scanning now, right? All of that stuff. I mean, the loaded box situation won't apply to individual cards. But yeah, there's a whole lot of fraud that goes on in the hobby, and they're unaware of it. And not only that, you have to look at the auction houses. Like, what type of fraud goes on there? Shill bidding, how hard? It's hard to stop the shill bidding that goes on there. And what if there's people like Shine and what he may have allegedly done when, according to the Spiegel Brothers lawsuit? You could look into all of that and say, hey, was there hanky-panky going on, or it's just, hey, he wanted the card and he happened to work there. Work at Golden, according to the lawsuit, Spiegel Brothers lawsuit. Regardless, right? Financial planners will not know that. They would have to watch SCR videos, Dan the Cardman videos, my videos, to research all of the hanky-panky that goes down. Now, this article did say, hey, look, there is an issue with illiquidity in this market because, hey, look, you may have a Honus Wagner card. It may sell for a lot, but what happens if someone is forced to sell in a nasty environment? What if they're forced to sell during a crash? There's an example I talked about during the 2008 market crash where people got conned by Bernie Madoff and they lost their money. So they had to sell their high-end collectibles just to get by and just to get money in the door. So they sold it, I forget what price it was, but it was substantially less than if they had sold it a couple of years before when the market was hot. So that's what it's talking about, illiquidity in this market. So suppose someone gets inherits it, and they're like, hey, look, we just want to sell it, we just want to get the money. It may not be the right time. So financial planners, they said, should probably look at, hey, when should they sell it? They should sell it at an optimal point. what financial advisors should have probably told people is sell in 2021. Sell in March and April of 2021. That would have been a fantastic time. And then compared to sometime about a few years ago, or 1.5 years ago, it was not the best time to be selling high-end stuff. Unless it was a mantle card. That high-end mantle card. So, it is what it is. I do think that the financial planners should be looking at the interest rate aspect too that I've been looking into. And see that, hey, look, when they pumped money into the system, that's when collectibles started to go up like crazy over a decade ago. And then it went even crazier 2018 to about March, and then from March of 2020 to March of 2021, it just spiked up. So it is what it is. I find it very interesting that financial planning is talking about these collectibles. So let me know your thoughts about this, and I'll talk to you later. See you. Bye.